Welcome back. Thank you for those of you who are tuning in for this. We'll have it available for replay as well. My guest today, two guests today, are going to be two of the smartest people in the industry, both former Coinbasers. I think that's what they call themselves. Antonio Juliano, who is the founder of DyDx, a derivatives DeFi exchange, and Linda Shi, who is one of the founders and GPs at Scalar Capital. The way that these formats usually work is we have one project lead, an entrepreneur, one two-bit idiot, that's me, testing out the system, and then one color commentator who's much smarter and more knowledgeable about the system, that's Linda, filling in some of the dead air because I'm terrible at multitasking. So as you see me struggling and paying exorbitant gas fees, potentially, during this demo, well, that's okay, because Linda will take over the reins. Before we get down to it, quick shout out to our two sponsors. We are looking for additional sponsors, but these two are pretty darn good. Luca saved money this tax season. It's not over. For those of you that filed extensions, you got until October 15th. Save money with Luca Tax, the only time-tested crypto tax software. It allows you to calculate your capital gains and losses using 3 different accounting methods side by side, all for free. You only pay to see their detailed tax reports and actually submit your forms with their software. They support downloads from all major exchanges and wallets and help you optimize your tax reporting so you can max out this year's refund or minimize your payments since we're going into a bull market. You can use promo code Masari Tax and save even more. Head on over, that's LucaTax, L-U-K-K-A tax.com, and use promo code Masari Tax. And then we got Crypto.com, been a big supporter of Masari cover to cover. How much are you paying for crypto purchases? Well, Crypto.com is now waiving 3.5% credit card fees for all crypto purchases. And apart from that, you can also get a great deal on food and grocery shopping, Crypto.com, or 10% back when you pay with their MCO Visa card. If you're not into cards, that's okay. You buy gift cards, virtual gift cards in the Crypto.com app and get up to 20% back. Download the Crypto.com app today and enjoy the offers until the end of September. Thank you for bearing with me for that obligatory feed. I am going to invite our guest of honor, Linda. How are you?
Hey, good. How are you?
I'm good. Antonio?
Hey, how's it going?
Hey.
Thank you for joining us.
Of course.
So, Antonio, first off, congratulations to you on a different kind of baby. A lot of progress with DyDx. I think we're going to YOLO into some ETH perp swaps today. But like to start out by maybe just getting a 2-minute overview of both the project's history and then we'll get the same kind of background information from Linda as well. But project's kind of background and history and kind of where we are today and what we're going to showcase.
Yeah, absolutely. So maybe I can start with just where DyDx is at right now. So we are currently one of the biggest decentralized derivatives exchanges. So we offer 3 different types of products. So the first is Perpetual Contracts, which are just a really popular type of derivative within the cryptocurrency industry, kind of by far the highest volume products on crypto across the entire space. And we launched these Perpetual Contracts a couple months ago. We launched our first contract, which was a Bitcoin Perpetual Contract. And then just a couple weeks ago, we launched an Ethereum Perpetual Contract. In these contracts, you can trade with up to 10x leverage on DyDx. You can use them to go long or short, and that's kind of the main use case for why people use DyDx. And then there are 2 other products that are kind of currently live on the exchange. So spot trading, which for all of you is just, it's kind of normal buy-sell trading, and then margin trading as well, which is kind of trading with kind of borrowed funds to also achieve leverage. So that's what's currently live right now. Of course, we'll go through that in just a moment. I guess a little bit of background and history on DyDx. So we've been around since mid-2017. So I think it's actually been over 3 years of DyDx now. So it's been quite a while. It's been an interesting journey. So we launched kind of right in the midst of the ICO hype and bubble back in mid-2017. But we did not do a token. And we have kind of built a couple of things since then. The very first thing that we built was basically kind of more of a brokerage style interface, so a less professional interface to kind of get leverage and kind of go short on crypto assets. And then now what we've really built is kind of an exchange that's really targeted at professional and sophisticated traders. And we'll kind of go through that in just a bit, but that's kind of our target customer now.
Excellent. Very helpful overview. Linda, did you overlap at Coinbase? How did you?
Oh, yeah.
How did you get to know each other? Because obviously Coinbase is a big company. Did you work together? What's the origin story between you and Antonio?
Oh, yeah. I mean, we worked together at Coinbase. Antonio's like one of the smartest engineers from Coinbase. And so when he left to start DyDx, I immediately just wanted to invest and back. That was actually my first angel investment I ever made. And I actually didn't even know how angel investing worked. And this was well before I started my fund, Scalar Capital. So really excited to just see all the progress that DyDx has had. And it's a product that we actually use at Scalar. So we lend out our crypto on there and earn interest. So really excited about today's session so people can just see like the product and how awesome it is.
Amazing. And that's the little the most obvious open secret about angel investing, that the first few checks that you write, you have literally no idea what you're doing and you're just giving people money. Almost insane.
Yeah.
And usually it's exactly that thing. It's, I trust the person I've worked with him or her, and I just have a lot of confidence in their ability to execute. Fantastic. So Antonio, so the first thing that we see when we come to the interface here is trade.dydx.exchange. And we've got a couple of pop-ups right off the bat. So it's kind of a welcome tutorial that prompts you to either trade with up to 5x leverage, check your balances. I suppose this is once you connect a wallet or borrow assets directly to your wallet. So for starters, what is you don't frequently see this. It's almost like there's no X here, right? There's no ability to just kind of like get straight to the screen. Did I come in through an alternate route, or is this intentional design to force people into a decision right at the onset?
It's a great question. And kind of the reason that we have this kind of pop-up as the first thing that you see on the interface is because we have a lot of different types of users, and the types of users that we have are very different. And there's kind of three main types of users. So the first are kind of the very sophisticated types of users that I mentioned before, who want to trade advanced products, often trade with leverage. So, you can do that on the first step on the trade. Then kind of as Linda mentioned, just like another way that people are using DyDx, and another thing that you can do on DyDx is just lending your cryptocurrency out and earning some interest on that. And those types of users are very different from the types of users that want to trade. So kind of before we had this pop-up, we basically landed people on the thing that you see behind this pop-up, which is like this pretty scary exchange with like the order book and like these candle charts and stuff like that. And people are like, how the heck am I supposed to earn like interest on my crypto? I just want to like deposit and lend. So that's kind of the second thing that you can do here. And then like the third main thing you can do on DyDx, which is also a pretty popular activity, is just kind of borrowing assets directly to your wallet. This is like very similar to like a compound or something like that. So you can just like, as long as you have deposited collateral, just like borrow crypto to your wallet. So the reason we have this like, unexecutable pop-up is just to direct people to the right place and make sure that like different types of users aren't getting confused by like landing on the wrong part of the app.
Where do you want me to go first?
Let's go trade, I think, would probably be the best place to start. Let's just go for it.
I think we're lucky that this isn't quite as volatile a day as yesterday, because I think there's a good chance I would have either made a retirement fortune or lost everything probably within a half-hour window if I was trading with significant margin here. All right, so we're into the trading interface. I see first thing that's kind of primary call to action, which makes sense, is the connect to wallet. So I'm going to connect my MetaMask wallet here, if it allows me. There we go. And I see we've got email notifications, pretty nifty. Is that kind of all automated notifications, or do you have different kind of research and information that you guys publish?
Yeah, so it's mostly, there's different things you can subscribe to. So it's the normal like notifications on trades, like positions, closing, getting liquidated, that kind of stuff. But there's also like a research newsletter that we have as well.
Got it, great. Okay, so first thing that we see here, my MetaMask is connected, but I do not have anything in my margin account. So I guess the first thing that I'm going to do here is deposit And I see a lot of check boxes here.
Yeah.
All the legal stuff. And but not all features will be available. Okay, so what are the features that are deprecated when you're in the U.S.?
So when you're in the U.S., first of all, on the margin trading side, your positions have to close within 28 days. So that's kind of the first thing you're agreeing to here. And then the second thing is you cannot use perpetual contracts. So very similar to other exchanges, those contracts are not available to users who are in the United States.
Got it. Okay. So next time I should probably go through Opera. That way I can do everything through the automatic VPN instead of going through the Chrome browser, because then I'll just pretend that I'm somewhere else in the digital universe. I didn't say that, just for compliance purposes.
Yeah.
We'll strike that.
Did not say that. It's just for testing.
Just for testing. That's all in that. Big Brother's always watching. Okay, so I've got a little bit in these wallets. I might pay for like 2 transactions at this point with the gas fees. So let's see what we can do. I actually don't know what the gas fees are right now, but I did intentionally put a little bit of dye in here just in case there's significant. That's not bad. Looks like $6. Which, I always go back when I look at this, by the way, and yes, we know that the fees are going to ultimately go down. And this is for a fast transaction. I just edited it in MetaMask. You can't see the second pop-up. But, for those of us that were trading, even in the, mid 2000s at the discount brokerages, I think the discounts were like $7 a trade or $8 a trade. So, these gas fees, when you're actually doing trading, don't seem that crazy. For the most part, even though they're still ridiculously high, and if we're going to hit scale, they've got to get fixed. So I just approved that. I enabled DY, and now I see. Did it go through? It said it went through.
Did your transaction get mined in MetaMask or whichever wallet you're using?
That I'm trying to look at right now. I actually don't see.
While we're waiting,
okay,
should I talk to Antonio? Oh, I'm just curious about what metrics are you tracking right now with your launches? Like everyone's talking about total value locked up, but I really want to just highlight that there's a lot of different products in DeFi, and not all of them should be going off that metric. So really curious what you're focusing on and what you think others should be paying attention to when they're looking at DyDx.
Yeah, absolutely. So I have kind of a strong opinion on this, but I think total value locked is one of the worst metrics to look at for a lot of different products. So the main one that we look at is just trade volume, and kind of the main reason that we're trying to drive trade volume to our exchange is that's how we make money, is just through trading fees like a normal exchange. And that's how we know that kind of people want to use our product, because they're trading on it.
Do you ever look at the borrowing lending volume, or is that not as much of a core part of what you're building?
Yeah, it's a great question. So we used to a lot more, I would say, but now we've basically shifted our focus to be 100% on the trading side. That's why you see things like, borrow and lending just being a little bit more buried in the application. That's just really trying to push people more towards just trading, because that's where we see our niche. That's kind of how we make money, and that's how we see the most value that we can drive.
Gotcha.
Antonio, one of the first things I noticed here, and this happens with most of the apps, so there's a 2-step process here. One, there's the kind of authorization and the kind of enable transaction, and then you actually have to deposit. Can you explain why this is a 2-step process for all these assets?
Yeah, absolutely. So this is basically a hard technical constraint on Ethereum. The way you can kind of move tokens into smart contracts. And maybe taking a step back, there are 2 main things that you can do with an ERC20 token. You can send it to somebody normally, but you can also approve somebody else to transfer your tokens on your behalf. So basically what you're doing in the first step is you're approving our smart contracts to kind of take your funds. And then the second deposit step is you're calling our smart contracts, and then our smart contracts basically have its internal accounting kind of take funds from you and then just credit you that balance in the DyDx smart contract.
Got quite a bit of network congestion right now. So I'm trying to speed up the transaction. In general, is there any difference? I think I just went through because I just saw something change in the background. There we go. Is there any difference typically in the speed at which an ERC20 versus ETH will deposit and the cost, or is this wrapped ETH like some of the other apps?
So it's normal ETH, so it's a lot easier. There's no kind of wrapping ETH step. In terms of the speed to deposit, actually any transaction on Ethereum is purely, well, this is not quite true, but it's mostly just dependent on like the gas price that you set. Sometimes if you are to send transactions with like really high gas, it'll take a little bit longer for a given gas price, but it's basically just dependent on how high a gas price you set.
Excellent.
Yeah, and the nice thing is that if you enable it once, like you don't have to go through this process again if you're going to be actively trading.
Right.
Okay, so I just ate $30 or so, $35 in cumulative gas fees.
Yeah.
We knew it was going to happen. It's all good.
Yeah.
But that's why we're YOLOing in with size. For this demo.
Make up for it.
So, yeah, I really wish that I had a lot more in here, but I'm too cheap and too scared. All right, so we're gonna we got $1,200 worth of DAI to play with. Where should we go? I mean, obviously my eye is immediately, I'm on tilt now because of those gas fees. So my eye is immediately drawn to the perpetuals and this big 10X button right now. What type of user behavior are you typically seeing in terms of the amount of leverage that folks are using and maybe what the profile of market maker looks like on either side of the exchange today?
Yeah, absolutely. So in terms of like our current users, it's mostly just like individual traders and specifically people that are like already in DeFi. Like there's a lot of overlap with DyDx users and other DeFi applications like Compound, like Uniswap, the traditional things that you'd use in DeFi. So that's kind of the current user base in terms of the current market makers that we're working with. So I'm sure you can see there on the order book. But basically all these like big maker orders that are on the exchange are just different market makers that we're working with. We have about like 3 to 4 main ones that we work with, and then there are a couple of smaller ones as well. But that's where a lot of our liquidity comes from. And one of the things we really focus on is just making sure we have significant liquidity on the books because we are, again, like trying to attract like bigger, like more sophisticated traders to the exchange.
Got it. I notice DAI is trading at 102 right now, and that's consistent. Balance DAI about 12.15 versus 12.47. So I got 12.50 give or take that I'm going to throw into one of these perpetuals. I suppose this is the goal, right? Perpetuals 10x. It says not available in the United States, but we can still do margin trading. So this is basically just a CFTC kind of derivatives issue, right?
Yes, basically.
Okay. And so instead, what we want to do is head back to margin. And then we are looking at, I guess, essentially the same thing. Can you get up to 10x leverage?
So this is up to 5x leverage, but
okay,
yes, it's similar. Different types of products, though.
So I want to go with the max. All right, so now what's going on here? So my default option here is ETH. I want to go long ETH, and I want to hit the max, but I currently have DAI.
Right.
Do I need to trade that first?
So you would need, so for taking an isolated long position on ETH, you need ETH to put up as margin deposit. So you can either trade for that in your margin account using the cross feature, or you can kind of borrow it.
All right. For the sake of time, I'm going to go with a market order. Most people watching will be laughing at this. But first thing I see here, I don't have the ability to select max, do I?
Correct. Yeah, you have to just put in like whatever you want to trade.
All right, so I got to go 12.15 is going to be what, 3 points?
So yeah, maybe if I were to just call out one product feature here. So if you put in, say, like the 3.1 or something a little bit bigger, it's actually, you can kind of trade into negative balances here. So if you'll notice, that this will basically take your
it's
die
cross
like
up,
all the
okay.
way to negative.
Got it. Mm-hmm.
And because this cross account, it's actually a margin account, you can natively borrow funds within it, and it'll kind of let you make this trade, assuming the trade size is big enough. And that's kind of how that works. So you can actually just get leverage and kind of get margin directly within your cross margin account. You don't have to take like an isolated position to kind of get leverage on the exchange.
Okay, so I can take a margin position with DAI and then trade ETH leverage as well.
Yeah, basically. Like you could even trade, like you could even buy more ETH right now and kind of go more negative DAI to effectively take the leverage long position in your cross account.
What's a typical amount? Because the margin that you're going to do on an ETH trade, 5x is the max there. But for doing this cross trade, what do people typically do?
Yeah, people typically
2x or
I think they would probably stay with like 3 to 4x leverage. There is a bit of buffer, like even if you take a 5x leverage position before you get liquidated, but of course it's like how much risk do you want to take on.
All right. I will be relatively conservative then, and I'll only take a little less than 2x leverage. But now this is fun because now I'm going to have 6 ETH to play with.
Yeah, I think so. We actually also just reviewed our minimum trade size. So I think if you refresh the page,
I need to go bigger.
Go longer.
I actually need to go bigger. All right, this is fun. Now we're getting into degen territory. Place,
oh my gosh!
And it's a market order, and we're gonna sign. I'm just very bullish right now with that. So I'm not just throwing money away. At least I hope. We're going to find out soon enough, and I'm going to report back next week if we have a spike up to 450. I'll be one of the happiest people in crypto.
Yeah.
Okay, so I believe that order went through.
Yeah, so the next thing to call out here in terms of how this interaction works is basically what you just did is you did not send a transaction, so you don't have to worry about like anything getting mined or anything like that. You don't have to pay gas fees. What you did is you just cryptographically signed a message, and then you sent that message to us. It kind of went through our central matching engine. You got matched with somebody, and then we sent a transaction to the blockchain to basically execute your trade. So now, without you paying any gas fees or anything like that, you have this position, and it got mined very quickly. Our backend services take care of that for you.
Very cool. Okay, and that's why this happens right here. So, are you taking? So how's that working then? Are you touching this at all?
Yes, we're not touching it at all. So basically, kind of at a high level, how our exchange works is it's similar to if you're at all familiar with like the 0x protocol. It's not, we don't use 0x, but it's kind of like the idea is based off of that, where we use these basically off-chain cryptographically signed orders. So every one of those orders you see on the order book that's like flashing in and out is a cryptographically signed message that we store on our backend. And then when you make a trade, you also sign a message. So that's what your MetaMask popped up for. And then when we send the trades to the blockchain, we're sending basically the signed messages or the orders that have matched with each other. And then our smart contracts know how to make people trade with each other.
Awesome. Okay. So we already levered up pretty nicely on the DAI side. I can go an additional 5x here. I mean, now we're getting into BitMEX territory.
So you can, yeah. So basically there's, maybe taking a step back, like there's 2 ways you can trade on margin. There's isolated and then there's cross. So basically what you just previously did is you made a big trade in your cross account. So now your cross account has negative like 2.6 thousand DAI in it, which means that you owe that much money. And you need to keep enough ETH in it to make sure that that account is collateralized before you kind of put more funds in this separate isolated account. That's why it's called isolated, to kind of take a separate leverage position.
Got it. Okay, so what's interesting here? So I'm just doing the quick mental math here. When I see this and I hit 5x, I currently have a balance of 10 ETH because of the margin. So when I hit 5x, there's a cap here just to make sure that I have at least a minimum margin deposit. How much buffer do I have before this gets liquidated? Is that a liquidation? Okay, here we go. Liquidation price right here. 351.71. If I max out, right? So now we can come back and be a little bit more reasonable. You can see, okay, 2x. I certainly hope we're not going into the 220 range. Otherwise, I'm going to be eating ramen for a while. All right, 293. That's a little bit, more margin for safety. 320. 4x seems okay. I don't know. Do we think that we have any more bad news on the horizon that's going to drop us down 15%? This is rhetorical to answer, Lindy. You manage money. I'm not trying to get you in trouble. I'm certainly not trying to get you in trouble.
Not investment advice.
Yeah, not investment advice. Okay, insufficient account collateralization. So let's see what I can get up to here. About 2.
So basically what's happening here is if you look at the top left section, you can see how your main account balances would have to change to make this trade. So it would basically take whatever margin deposit that you have to put down out of your cross account. Okay. So that's kind of why you see your ETH there going from 10 to 6. So it actually will probably let you do it more easily if you go up higher leverage, because higher leverage basically means that for the same position size, you're putting down less margin deposit, right? So I still think this is a bit too much. I think, so if you refresh the page, actually, we just deployed smaller trade sizes. So you should be able to make a 1 ETH trade.
Is this like happening in real time? You're like, shit, he's going to really go degen.
I anticipated that this was going to happen. Okay. We were actually, this isn't just for you. We were planning to do this anyway today. I think we'll do this sooner. But if you just kind of take maybe a 2 or 3 ETH position, I think it should probably let you do that if you change your position size there.
Okay.
Oh my God!
I don't think anyone has that much. maybe Joe. All right. Gonna be 3. Oops, 3. All right.
Great.
There we go. Okay, so what we're seeing here is pretty hefty fee for this. So,
yes.
And this is because it's a small order?
So that's basically because, so we actually just launched this, but now one of the things we were running into is we, as a company, we're losing a lot of money to just paying people's gas fees. So similar to how you paid like a $30 fee for deposit, we also have to pay a fee on the back end to kind of make you take this isolated position, which you can see is quite high.
Yep. All right, so I want to max out. All right, 3.75, that gets me sub 6%. You can buy me a beer when the lockdown ends.
Sounds good.
For
Inexpensive beer.
You know what? If we go up to 500 all of a sudden, then it's really not going to matter. Okay, we'll sign this. And just to make it abundantly clear, although I'm being glib, I do not recommend this as a trading strategy. Some of this cost will be reimbursed to me. The gas fees, at least, not the stupid amount that I'm gambling with, but I don't recommend just willy-nilly throwing money away or trading when it's this expensive to trade. Do not take advice from a 2-bit idiot, and if you do, don't go grind any authority.
Antonio, can you explain how the liquidations work? Because I think that's really interesting.
Sure.
Yeah.
Yeah, absolutely. So the way liquidations work on DyDx is it's similar to the way they work on Compound, actually, where kind of all of the collateralizations of the accounts are determined by oracles. DyDx integrates with the MakerDAO oracles. So we use the exact same oracles that kind of DAI and like CDPs are based off of. And when those oracles change, so say the price drops and the oracle price changes, then basically anybody can watch the blockchain for liquidatable accounts. And then anybody, doesn't have to be us, can also send a liquidation transaction to basically liquidate an account. And the reason they might do that is because liquidators earn a 5% fee on the size of the positions that they liquidate. So there's tons of people that are doing these liquidation actions, watching the blockchain and help us make sure that the accounts are always closed out before they become uncollateralized.
Okay, so we've successfully opened an ETH DAI long position, which is very exciting. And the first thing that I notice is we are 3x long, but it is it's liquidation going to be all the way down at 295, so we feel good about that. And at the same time, walk me through what's going on with the margin account balances, because before we were negative 2,600 in DAI and we had 10 ETH.
Yep.
And now I look at this and it looks like we have less ETH. So it almost looks like we've de-risked. Are we adding these two positions together? So it is the margin, in fact, the 8.75 ETH that you see in the top left, plus the 3.75 that you see in the equity position for the trade that we just executed.
Yeah, absolutely. So I think the important thing to note here is that for isolated, each position that you're taking is totally separate and it's margined separately. And kind of the account balances are separate. So you can kind of think of your margin accounts, which is in your top left, which is what you're seeing there in this position, as totally separate. So that's kind of why funds were taken out of your margin accounts. They were taken out of your main accounts, put into this isolated account to act as its margin, and kind of the profit or loss that you make on both of these positions. So kind of your long position that you have in your main accounts with just that negative DAI, and then your isolated long position are totally separate.
Excellent. My net long position ETH then should be 12.5, right? 3.75 plus 8.75?
Yep.
Less
That's
the DAI.
correct.
Okay. That's the DAI liability. Excellent. All right. So 12.5 ETH. Number go up. And I need to pay back 2,637. So give or take that puts my net exposure right around where we started, less a little bit on the fees. Obviously, both the DyDx fee because of the small order size and then the gas fees. So now we wait, right? And hopefully there's some good news on the horizon. Now, the final thing to think about here is U.S. customers. So what's happening at expiry? Is this can be closed out at any time, but do you have additional liquidation mechanisms or 28 days from now, if I just completely forget about this, what happens?
Yeah, so 28 days from now, it's actually a very similar mechanism to what happens at liquidation, but the fee is a lot lower. And basically what happens is similarly to scanning for liquidatable positions, anybody can scan for expirable positions, but kind of the fee that you would get for expiring a position and consequently also the fee that you as a trader would lose to expiration. We basically use a very simple just kind of Dutch auction. So kind of the fee that an expirer would get for expiring your position would start at 0%. And then over the course of, I believe it's an hour, would kind of ramp up to 5%. But normally they get expired with kind of like half or like 1% slippage by just our network of liquidators and expirers.
Awesome.
So since we can't actually test out the perpetuals, could you talk about how like Bitcoin and ETH perpetuals have gone since you launched it?
Yeah, absolutely. So we've seen some decent adoption on both our Bitcoin perpetuals, and actually we launched the Ethereum perpetual just about a week ago, so it's pretty new. But we're seeing some decent adoption there as well. I think the thing that we're trying to do there over time is just kind of get more, I would say, DeFi type users just educated and kind of up to speed with how they can use perpetual contracts to kind of achieve leverage on the assets that they're already trading. So for our perpetual contracts, we have two, the Bitcoin and the ETH. If you're a more sophisticated trader, one of the interesting things to note about the ETH USD perpetual is it's what's called an inverse perpetual. And this basically means that it is collateralized in ETH. It's not collateralized in a stablecoin. This is very similar to if you've ever traded on BitMEX. BitMEX, the only asset in the platform is Bitcoin, but you can also trade on the price of Bitcoin. So the reason that we launched this ETH USD perpetual as an inverse perpetual is just really to go after kind of the main use case that we see for DeFi, which is people that have ETH and just want to get kind of leveraged exposure on ETH, or at least the main use case before all the yield farming stuff. That's kind of what most of the users of our platform have been doing, and something that we can also cater to with this product.
Very cool. And then is the 10x just like a limitation by you guys, or is it a regulatory limitation? I actually don't know.
Not a regulatory limitation, yeah. It's just a limitation by us, and kind of the main thing that we think about when we think about what leverage is appropriate for our products is how performant our oracles are. So what is the maximum latency that the oracle updates can happen? What's the maximum, we look at historical trends for the price of the assets that we trade. So Ethereum, then we say okay, well, this is a bit simplified, but like, okay, if the Oracle price is updating like on a 5-minute latency, then like what's kind of like the maximum or risk adjusted like maximum we think is likely to drop during that time. And that's kind of what we use to inform our decisions on like what we set the maximum leverages to.
Gotcha. Cool.
Antonio, whose Oracle are you using? Have you built this in-house or?
We have not built the Oracle in-house. We are instead using MakerDAO's V2 oracles. And basically the way those oracles work is there's a kind of distributed network, I would call it, of reporters. We're actually one of the reporters, but there's like 20 something, I think, reporters that are basically just like cryptographically signing and attesting to what they think the price of each asset is on different exchanges. And then those kind of signed attestations to the price are periodically pushed onto the chain. We do a lot of analysis on this, actually. We believe that kind of the Maker V2 oracles are a good bit the most performant and the most decentralized as well in terms of real-time price oracles. So that's kind of why we integrate with those.
The infamous Zeus Capital short of Chainlink is probably something that anyone that's part of crypto Twitter knows all too well. I'm not sure if you read that report. I thought it was a little bit over the top, but there was one good point that stood out to me, which is the potential misaligned incentives of a decentralized Oracle system like Chainlink or Band or any of these other kind of middleware protocols, where the value of those tokens relies on higher fees for anyone that's going to use them and leverage them, right? And so there's kind of an open question as to whether it's just a race to the bottom in terms of fees, or how would you as an application builder think through the trade-offs, both from a security standpoint, but then a cost to user standpoint of using any Oracle system in the future. Today it's MakerDAO, but obviously it's getting to be a more competitive space. Is there merit to that criticism that some of these tokens that are specifically oriented around securing a decentralized Oracle network are probably have some fatal flaw?
Yeah, it's a great question. I'm probably not the most qualified person to answer more on just like the value of the token side. I'm not 100% up to date on like what kind of the Chainlink token or how that kind of integrates with their network. We do like monitor Chainlink very closely. Actually, big fans of Chainlink as well. We're probably likely to use them actually for some of our other perpetuals, okay, for which Maker doesn't have price oracles, and they're kind of almost as performance as the Maker oracles. In terms of like, from our perspective, like how we think about the costs of using different Oracle systems, we don't pass those costs directly onto users. It's kind of something where we more just like, they basically like whitelist the addresses. So like they would whitelist some of our smart contracts to be able to read from the price oracles. And we would kind of pay them, some amount of money to do that. But it's really not a big consideration for us. Just kind of the amount we would like pay on that versus the amount we would pay for other, I would call it infrastructure aspects of our system is really small. So the main thing that we're always looking at and we're always thinking about is how performant is the Oracle, because that really just directly affects like what I was just talking about, kind of the maximum leverage that we can offer on our product. So it's like, if there were a slightly more performance Oracle that like costs 2x the price, I would like gladly pay that. So it's really all about like performance of the Oracle system that we're using.
Antonio, I had a question on this because I actually don't know how to do this. How do you do a flash loan on DyDx? Like, there's no front end for it, right?
Yes, that's correct. So yeah, that's a great question. So you actually can use DyDx for flash loans. I think maybe some people know about this. I feel like it's mostly more sophisticated people that have been using us for flash loans. We, again, haven't really prioritized that as a product experience to the level that like an Aave or something has. But at a technical level, you can actually use DyDx for flash loans. And the really interesting thing is it's completely free to use DyDx for flash loans. So that's a lot of the times why you see a lot of these big flash loan incidents or arbitrage opportunities, whatever you would like to call it, using DyDx, because you don't actually have to pay a fee like you do on some other platforms. It's fairly technical how you would do it. It's probably don't have the time to get into it like right now, but there's kind of some information on that on our developer docs, or you can always jump in our Discord to ask questions on that if you're interested in getting started there. But you probably have to be like an engineer to do it.
Gotcha. And then I just wanted to get your thoughts on how do you think about the whole liquidity mining and yield farming space right now?
Yeah, it's a great question. I mean, I guess personally, I've been like pretty surprised and like impressed with like a lot of the traction, obviously, that like tokens like Comp and other decentralized networks like that have had. And it's definitely something that makes us like stand up and take notice of what's going on, of course. I think DYD, so we're still basically like thinking through what we want to do on the token side. So certainly no guarantees like either way, but yeah, my honest thoughts on it are that I think it is really valuable, like empirically, for the growth of like decentralized networks, and would also be really valuable for DYDX in a similar way. We're just kind of thinking through like if we were to do it, like what would be like the ideal token design. So that's kind of the way we're thinking about it. We're always really focused on DYDX as first and foremost a product. And I think that that's like a really important distinction and like a really different mentality than at least my interpretation of like the way a lot of different decentralized protocols kind of think of themselves, which again is like more of a network or like more of a protocol. Yeah. Like at the end of the day, we just want to make an exchange and a product that's every bit as performant and every bit as good and hopefully better than other exchanges that users use, whether they be centralized or decentralized. And we want to do whatever is necessary to be able to build that.
Yeah. That definitely shows to me, like, since I've been using the product. So I've really appreciated all the features.
Yeah, absolutely.
I had a similar dance with Hayden from Uniswap a couple of weeks ago. I know you're not going to talk about a governance token, but what would be the process of decentralizing DYDX, and what are some of the critical things that you think need to be done to make sure a system like this scales beyond just what you and your team have delivered so far?
Yeah, absolutely. So I think, we're thinking about like, so maybe first of all, I think decentralization has like a lot of different aspects to it. You could call like censorship resistance would be one of them, like non-custodial would be another one of them. Transparent, like auditable would potentially be another one of them. I think we do really well right now on kind of the non-custodial and then the transparency parts. Right now, clearly DYDX, at least the product that you're currently using right now, is not censorship resistant. And that's kind of the main trade-off that we've made for kind of getting a lot of the different like product level improvements that you can see. Like, just look at the order book right now, like orders are like flashing in and out like all the time. Like that doesn't happen on like any other decentralized exchange. And like the reason that we can offer that is because we have this central matching model. Like we don't get like reverted trades, like things like that. So we do get a lot of product level improvements for some of the censorship resistant trade-offs that we kind of make. But I think the process of decentralizing DYDX will be just a longer term one, and we'll kind of take like two forms. First is like decentralizing like the protocol level aspects. So things like, what assets are being offered, things like what are all the parameters on the different like margin accounts on the different perpetuals, what are the interest rates, things like, what comp holders are voting on right now. And then like the second part, which I think is, first of all, an open question, what we're going to do there. And then like, second of all, we just have to figure it out, is just like, how do we, achieve more censorship resistance in the system? But I think right now we're pretty on board with the central matching model and think that a lot of the performance trade-offs that we've made for that are warranted. And again, like this kind of just goes back to what our highest level priority is, which is offering the best product. And we believe that that's kind of the best way for us to do that.
Are interest rate swaps on the horizon?
Possibly, yeah. I think we're looking at, I think we see
DYDX. You can more or less derive that now just on the difference between the spot and the perpetuals.
Yeah, absolutely. Yeah, it's definitely something that we're investigating, both like interest rate swaps, things like options, other different types of derivative contracts like that. We just kind of started with perpetuals because that's clearly like the biggest market in crypto, and it doesn't exist in like DeFi in a big way yet. But absolutely for DYDX, we see it as, supporting all types of different financial contracts and products in the future. Yeah, maybe one other thing I'll kind of call out that we are actually working on right now, which I guess is a little mysterious, but so you probably, obviously we experienced this even just in this demo, which is the gas fees and kind of the level that you have to pay right now. Even in the last day or two, it's gotten completely ridiculous. But even before that, it's just kind of tough if you're paying like $20 like a trade, $20 like every deposit. So one of the things we are actively building right now is a layer 2 system, which should be live in a couple months. We'll be releasing more info on that very soon, but that's basically to say, like, don't give up on DyDx yet because the fees are like $50. I think like we'll solve this in a really big way in a couple of months from now. And the project that we're building also will have a lot of other improvements. So we also experienced this in this demo, but like one of the biggest like UX challenges that users on DyDx face right now is the trades aren't instant. So like when you opened your position, you had to wait that like 30 seconds or whatever, where it was like spinning, and basically what was going on there is our transactions were getting mined on the blockchain. But once we move to this layer 2 scalable solution, trading should be instant, should really feel like a centralized product that you're trading on. From a product perspective, obviously it still is decentralized, but that's something that we're building, should be live in a couple months, and something we're really excited about.
Last question, it's at least for me, and Linda, if you have any more, please chime in. But I'm curious what the, if you just run the numbers in like a sensitivity table almost for, a $500 trade or $1,000 trade or $2,000 trade, just how far off is DeFi powered swaps today from central limit order books, right? And I think the most interesting thing to me to track, and we've seen this a little bit with other decentralized exchanges for the spot markets, is how those spreads narrow over time, because it feels like there was a tipping point for decentralized exchange liquidity, and there will be a similar tipping point for decentralized derivatives exchange liquidity once the spread narrows a bit. It doesn't need to get to parity, but it needs to be not quite as crazy as it is to do on chain, as we just saw in this demo. Do you track that? Is that visible anywhere? I think if there's a dashboard for that, I'd link to it. I think we'd love to see it, and how it gets updated. Either through Dune or the Graph or wherever you might be.
Yeah, absolutely. So we do track a lot of metrics on this, mostly just track them internally right now. We will think of ways to kind of share it more publicly. But basically the main metrics that we track are what you just mentioned. So first of all, like, what is the spread on all of our markets? And then the second main metric that we track is what is the amount of capital that's available within certain slippages. So like within 25 bips, 50 bips, and 100 bips. And we were just trying to improve on all of those metrics. So we're doing pretty well, actually, I think, in terms of like the spread. I mean, you see it right there, like 5 bips, not too bad on the perpetual products. The thing that I think we are working on, which is still a lot better than basically all other like decentralized exchanges, is the kind of amount of capital within certain slippages. It varies, but kind of very roughly, it's been about like 500K USD or so per market, in terms of like that's the amount you can buy before moving the price 1% on the books. So yeah, that's decent, and I think it supports like the size of traders that we have right now. It's not going to be like you can come to DyDx and place $1 million market order and it's going to be cool, but like people regularly make like even 200, 300, 400K trades on DyDx, and the slippage for that is usually less than like 50 basis points. So that, but that's still probably like, it's a good bit less obviously than some of the biggest centralized exchanges like BitMEX, like Binance. I think that's where we're going, and that's where we're comparing ourselves to. But definitely, like, I think these things like both taker volume and then like maker liquidity have to grow like in lockstep. It doesn't make sense to have like a huge amount of taker volume and like no maker volume. And it's conversely doesn't make sense to have like a massive amount of liquidity, but like nobody's actually trading. So that's kind of what we're continuing to build up over time.
Linda, can you talk at all about what it's like to be one of those whales on the platform?
Oh my God, no.
and whales is a relative term, of course, but certainly, it sounds like more than what I just traded with, or what a typical retail trader would think about. How do you weigh the pros and cons here?
Yeah, I mean, I don't consider us a crypto whale, but when we are making trades on decentralized exchanges, we are very aware of slippage, especially in the case of using AMMs. I mean, that's just like, you can't do a large order on there. So that is something like I'd like to just see more liquidity on decentralized exchanges over time. But yeah, I mean, it's been like a pretty good experience so far. We do a bunch of trades on various dexes. So I think that we're seeing like a large trend of that right now. And some of the assets like you can only get on dexes. And so I think like the long tail, you'll definitely be using them in the future.
Well, Antonio, we'll give you the last word. How can people find you? How can they get involved in the project or the community? And what should they be on the lookout for?
Yeah, absolutely. So you can find us at dydx.exchange. So just go to that. Has links to the product right here. Has links to our Discord, to our kind of Twitter. You can follow all the announcements there. In terms of what to look out for on the horizon, I don't think we've announced this publicly yet, but yeah, we are going to be launching a new perpetual soon, and that's going to be a link perpetual. So you heard it here first, but that should be live in a couple of weeks. And yeah, that's probably the biggest near-term project. And then the longer-term project that we're working on, which should be live in a couple of months, and I think will be massive, both for DyDx traders and for us as a company, will just be our layer 2 support for perpetuals. So really excited about that as well, and look out for more news on that in the coming weeks.
Well, hopefully we'll do it again soon. Linda, thank you very much for being a co-pilot here and asking the smarter questions while I tried to get a handle on these gas fees. Hopefully we'll be able to do another one together soon. Just let me know which projects you want to dig into. And for everybody that tuned in today, this will also be available on replay within the next 24 hours or so. We've got a lot of these coming up. This is the training wheel session, me just getting back into the groove. We're going to be doing at least a couple per week from here on out because there are so many freaking things to talk about in DeFi, so many products. And until you've actually played around with them, don't think that voice-only podcasts are quite doing the trick. So join us again next week. We're going to go through a few more projects, and we'll have that full schedule in our newsletter tomorrow. Subscribe to the newsletter. It's free. And stay abreast of everything that's going on at Masari. Linda, Antonio, thank you so much.
Thank you.
Thanks so much for having me.
We'll catch up with you soon. Thanks again. Until next time, peace.